If you do this, come back to me in 2 years. Let me know how you're doing in your portfolio. Hey, what's up guys? How are you doing? Hope you're having a lovely weekend. So today we're going to be looking at some of the best performing stocks in NSE. By the way, Nairobi Stock Exchange is one of the best performing stock exchanges right now in the world in terms of just overall performance. Doesn't mean it's the best like in terms of returns, but it's the best in terms of overall performance. It's the best in terms of overall rebounding after all the things that happened, the COVID stuff, then the economic meltdown followed by the Ukraine-Russian war. So there were just so many economic issues that led to so many things happening. And right now, most stock exchanges are rebounding, even though the S&P 500, which is the main standard of measure, is doing really poorly this week. But generally speaking, economies have rebounded and things are looking much better. So Nairobi Stock Exchange is one of the best performing right now in the world, and that's an amazing thing to have. Now, I do say that, you know what, if you're a new investor, don't rush into stocks because stocks can be volatile, they can be unpredictable, sometimes it might even feel like gambling. And therefore, if you're a new person, I don't want you to get into stock investing, get your feet wet, and then the first thing you experience is a loss. And then you're thinking, damn, is this how it is usually? So I always say, look for more conservative, safe, traditional investments before you get into stocks. But it is paramount and important to have stocks as part of your portfolio at some point. Doesn't have to be in the beginning, doesn't have to be, immediately, but can be something you're looking forward to and you have a plan of actually having in your portfolio, because stocks can be very good for returns. They might be a bit more risky, but they have a potential for much higher returns, as we will see on my list, some of the best performing stocks right now. So we're going to look at some of the best performing stocks, starting with the 10th one. I'm going to take the 10 top performing stocks based on 1 year return, and I'm going to tell you how much they gave you, which companies they were, what's the ticker symbol in case you're going to look for it. I'm also going to discuss what I think you should do at the end of the video and which stocks you should buy. I always say don't just rush and buy stocks because I said, oh, it's performing well for 1 year. The thing is, could actually tank tomorrow, could tank 2 days from now because of other fundamentals and other things. As stocks growth is not just based on the fact that, oh, it's giving good returns. You should be looking at many factors before you decide on the growth of a stock. So I'm going to make sure that I give you some information on some of the best stocks that you could buy for this year, because looking at the list I predicted last year, and you can watch my video on that, all those stocks have performed incredibly well, whether it was the list for dividend stocks, whether it was the list for capital gains, whether it was just a list for sectors that you should actually focus on. All the stocks I mentioned, all the sectors I mentioned have performed incredibly well within the last 1 or 2 or 3 years. So listen to me on this video and take notes and make sure you get yourself at least 1 or 2 companies that you feel good with. Now, the thing is, your objectives must determine your investing. Don't invest without a proper objective. Don't invest without knowing where you want to be. So make sure your investment is aligned with your objectives. Do you want capital growth? Do you want just returns? Do you want to be trading? So you want high volume and high liquidity? Do you want medium-term growth? What are you looking for in the market? That's very important. Otherwise, let's jump in and look at some of the best performing stocks in 1 year return. What did they give you back? And then let's discuss the rest. So from the 10th one, we have NCBA Group. The ticker symbol for that is just NCBA, and they gave us 17.04% for 1 year. That's amazing, amazing return. I will tell you more about bank stocks and what I think about them and which one you should be looking into if you're looking into bank stocks. So after NCBA, at number 9, we have Liberty Kenya, and the ticker symbol for that is LBTY, with a return of 24.25%. 24.25%. That's an amazing return. Liberty Kenya gave us a really awesome return. 24.24%. That's way above the average, way above even bonds. Then we have CIC Insurance Group. The ticker symbol for this one is just CIC, and it gave 25.6% return, just 1% above Liberty Kenya. CIC Group with the ticker symbol of CIC gave 25%. Then we have Nation Media Group, gave us 28.75%. The ticker symbol for Nation Media Group is NMG. So if you want to look for it online anywhere and you want to look at the performance, you want to do some research, you can just look for NMG stock. Then we have Britam. The ticker symbol is BRIT. It gave 29.84% return. That's almost 30% return on your money. That's amazing. You can calculate how much you got if you invested, let's say 20,000 or 10,000, and see what that stock gave you. Then we have Capacity Investments, which is becoming one of my favorite investments, and it has a ticker symbol of CAB. It gave 30% exactly, 30%. Then we have Williamson's T, WTK, and that gave 35.88%. Williamson's T gave 35.88%. Then we have Bamburi, which has a ticker symbol of BAMB, and that gave 68.16%. Then at number 2, we have Kapchorwa KAPC, and that gave us 76.76%. Man, that's crazy. And then number 1, we have Everready, and that was 82.09%. Now, besides this, Kapchorwa actually had a 1-year return just 1 week before of 96%, but it has had a change of around 10% last week and then 10% the week that has taken it down in terms of performance for the year, but it had given up to 96% at some point, so you can imagine. But it had given up to 96% at some point, so you can imagine the kind of return we are looking at with Kapchorwa. And one of the best companies I've always said, you should have some money in there as well. So you've seen the top 3 is Everready, Kapchorwa, and Bamburi. And that one we are talking about 68% Bamburi, 76% for Kapchorwa, 82% for Everready. 1-year return. 82%, you're almost doubling your money. If you had 1 million, you're just somewhere around 800 something thousand. So 1.8 something. So that's an amazing return on your money. Tell me where you will get that kind of return, please. Let me know in the comment section if you think there's another investment that will work for you without you actually putting in time, energy, or anything to get that kind of return. Like I said, these stocks performed amazingly well, right? So it's an amazing, good performance, 1-year performance, but that's not how you analyze stocks when you're going to invest in them. It's good to look at their performance. It's good to look at the trailing 12 months. It's good to look at 1-year performance. It's good to look at year-to-date performance, all these factors, but you want to look at the fundamentals of the stock that you want to invest into. Now, would I say go run and buy these ones? No, that's not the issue. This is just to tell you that stocks do well, and if you choose the right ones and you're patient and you're investing for the long term, you're gonna make some good money. This is why I'm doing this analysis. But if you want to buy stocks, you have to know the fundamentals of the stock. You have to know your objective for the stock. What are some of the areas I think and some of the stocks I think you should be looking at for this year? Number 1 is the banking stocks. And banking stocks here, I'm talking equity, NCBA, I'm talking cooperative, I'm talking Stanchart. Look at these bank stocks in Kenya. They are going to do well in the long run, especially if you're investing for capital gains. The Kenyan economy will rebound. The Kenyan economy is liquid. We are a middle class economy. We are producing stuff, and the money is going to be accommodated somewhere. So this is still going to encourage a lot of growth in the banking sector. There's so much because we use loans to develop stuff, and the banks are making a killing for it. And once they make a killing, they expand, they grow, and they have very good strategic growth. Most of these banks have very good fundamentals. They have very good cash reserves, very good cash flow. KCB had a bit of a problem, but again, it's just normal for stocks to have some issues sometimes, depending on management. So look into banking stocks if you want to make some money in the next 2 years, 3 years, or 4 years. The other area you have to look into, and if you're in Kenya and if you're not looking into this area, I don't know why, is agriculture. That's the only thing that's the backbone of that economy. That's the backbone of Kenya, agriculture. Look into agriculture. Get 1 or 2 stocks that you feel comfortable with in the agricultural sector. Look at their 5-year performance, look at their 10-year performance, look at their 3-year performance, look at their 1-year performance, look at their cash flow, look at their EBITDA, look at all those small factor revenue, and then the management as well, and then see if you are interested in any of them. Then pick one and stick with it. Pick one and stick with it. Consistency and discipline and patience. That's what will give you money in the stock market. So I've said the banking stocks. I've said agricultural. Then, of course, the one that I always like is telecommunications, which you only have one. Go into telecommunications, that's going to be there for a long time. Everything, it depends on our communication. Everything depends on interaction. So, telecommunications sector is still going to do really well. If you have stocks in those 3 sectors, just 3 sectors, and you have one each, only 3 stocks, you don't have to have a multitude of stocks. If you have those 3 sectors, you are assured of some amazing growth. And if you want to be really, really secure, get into utilities or consumer goods. Whatever happens, we're going to have utilities. Whatever happens, we're going to buy certain things. Whatever happens, we're going to survive. Whether COVID hits or not, people have to eat, people have to do certain daily stuff. So you want to get 1 or 2 in utilities or consumerism, and you're good to go. It's that simple, guys. You don't have to complicate investing. This is the easiest way to invest and make money in stock market. If you do this, come back to me in 2 years. Let me know how you're doing in your portfolio. And of course, this is on top of the other things that I talk about. The other safe investments that you should have. This is more like for potential risk growth, potential high growth, right? But again, you have to be sure that with stocks, one day it could be up here, the other day it is like 20% down, 30% down. You have to know your risk limits. You have to know what kind of risk can you actually take. So do not get into it and thinking, oh, I'm just going to get 86%, 82%, 68%, 76% in a year. It might not happen that way. Again, if you just want to invest, if your strategy is just looking at the best performing over 1 year, that's your strategy. It might work, it might not work, depending on how the economic environment is. There are like millions of strategies to invest in. Pick one, go with it, and see what happens to you. Let me know what you think in the comment section below, and let me know if you're investing in stocks. Which ones have you invested in so far? Which ones have paid you really well in terms of returns? And if you haven't started, what are you waiting for? Until next time, I'm out.